Hey guys, this market update. Things are not looking good right now. Very, very weak. Bitcoin potentially breaking this support level here at 55. Not a good level to break. We need the bulls to come in and defend this. Look at this level. It's a very, very important level right here. If we bounce from this, good news, but it looks like we're breaking down through it. There's fear right now about the unemployment rate. Very, very soft data. Recession fears. There's some good, there's some bad, so we'll go through that in this video. Let's see how that relates to BTC. Right now, this price action is not bullish. Yes, we've had this distribution, very, very common in bull markets. This has to be defended to keep the uptrend intact. Otherwise, this entire structure breaks. You can see the orange here. These are higher lows, right? But if we actually break through this, then this entire uptrend structure is broken, and you have to just regroup here and find some sort of level. This 50K level, very, very clear level that we may test. You can see that here. Maybe we just get dropped down to that. Look, I'm going to go through two scenarios for if you're trading or if you're investing. If you're investing, this doesn't matter. The narrative has completely gone out of crypto. No one cares about crypto. It's all elsewhere. It's on other stories. It's on other things like the election. All of the attention is out of this market. That's a good time to invest. Remember when all of the attention seeped away last time and we were down at 15K, 20K, and I was saying, look, if you're an investor, these are the times you just have to shut your eyes and buy. And then 6-8 months later, this happens, right? So these are the times where if you're an investor, you just buy weakness always, because your price is a 200-week moving average. You're in it for 8 years plus. Now, if we're trading, this is difficult. Do you just take a speculative long here and say, well, we're going to get defended? I don't see any narratives on the horizon that are really going to, change this scenario. Things can change quickly. The rate cuts won't change anything because everyone knows about them and knows that they're happening. So that's not a story, right? They were priced in long ago during all of this. It's really the election and who wins, some positive news headlines, but that may not come for a lot later, right? We have to get through softening jobs data, uncertainty around that first, before what we think Bitcoin will price in, which is stimulus. Because whenever there is weakness, stimulus happens eventually. And that's why I'm in Bitcoin. That's why Bitcoin exists, right? Is to protect against that stimulus, which I'll show you some really good data on that in a second. But that is the trade, right? So do you take a speculative here? Not really, right? You wait, and maybe there's some sort of crash or an uncertainty event, and something happens, and then you get the big sell-off, and then some sort of reaction from central bankers coming out with their rhetoric again. Maybe wait for that, right? So we're in a kind of no man's land, very difficult. If you're an investor, same thing. If you're a trader, maybe wait, maybe take a speculative long here. Probably better to wait, in my opinion. If you do trade though, Bybit deposit bonus, click the link down below. Make a deposit on Bybit and trade. You can get up to $30,000. Check the link below for the details. The thing everyone has been worrying about for the last few years is inflation. That is not an issue anymore, at least for markets. Inflation is within the range. It's in the twos. It's coming down. So it's no issue. Inflation is not an issue anymore. Markets don't care about it. The thing that markets care about now is the unemployment rate, because that's what the Fed controls, right? They raised interest rates to make people unemployed. Now that data is coming through, but how far is it going to go? Nobody knows that. And that's why the uncertainty exists. And that's why people don't want to come into markets and bid up prices. Plus, you've got some seasonality. Everything's starting to make sense. Look about 6 to 12 months in the future, though, what will happen? The Bitcoin trade for me is not that there will be a recession. I believe that without government or central bank stimulus, we will have much higher unemployment than we have, and much lower GDP and much lower asset prices. Those three things naturally should occur. And I think the government and the central bank put as much stimulus as they have to prevent those things happening. And that means they debase the currency and stimulate asset prices higher. And that's why I'm in BTC, because I think it's the fastest horse in that race. That's the Bitcoin trade. I don't care if a recession comes. I can take the pain for 6 months, 12 months, because I think that stimulus comes, and that's the Bitcoin trade. That's why I'm in. So it doesn't bother me, but if you're trading and you're in higher, this is obviously a very uncertain time. That's why markets don't like uncertainty. That's why they're coming off a bit. Job openings in a broad downtrend. Not good news, not good news at all for risk assets, for anything. But for this, if this continues, stimulus happens, asset prices go higher eventually. That's why I'm in BTC. If we go over to the, I think, ADP payrolls here, soft number, you can see the downtrend happening. Markets don't like this because the downtrend, speeding up, potentially not great. Short term, But long term, I think the stimulus comes. Labor costs revised down. Again, deflationary pressures. We're seeing that around the world. Maybe it's just all of this data starting to come out, showing all of these disinflationary pressures. But remember, what the central bankers despise even more than inflation, it's deflation. Because if deflation occurs, wages go down, the price level drops, and all debt becomes unserviceable. That can't happen. That's why they stimulate. That's why asset prices are going to go higher eventually. Bitcoin is my trade for that. We've also recently had the uninversion of the 2's10 spread, which is a very important indicator for recessions, usually indicating that within 6 months or so a recession will take place. Now, what is a recession usually? 2 negative quarters of GDP. However, that happened last year and the government said it wasn't a recession. So I guess we'll have to watch out for that one. But in any case, what does this actually show? It shows the 2-year yield versus the 10-year yield of government bonds. Now, you would expect to earn more to tie your money up for 10 years versus 2 years. But that's not the case right now, although it's just uninverting again. The reason is because the Fed controls interest rates short term. They control the overnight rate. And so what they did is create lots of inflation by printing money, forces prices higher. And as inflation gets too high, they have to obviously try and stop that. The way that they can stop that is by forcing rates so high in the short term that it prevents money creation and prevents business growth, and it prevents employment growth, and the jobs market cools off. So it prevents you and me from demanding higher wages to compensate for the inflation that occurred. That's what they're doing. It's a cycle of boom and bust, but we're seeing it here. Usually, as the curve uninverts, it shows what the Fed is doing. It shows that the Fed thinks they've done enough. They think they've slowed business growth and credit creation enough, and it's going to come out in the data over the next 12 months that they don't need to have the rate so high right now. So they're going to cut. However, what usually happens is that they create a big enough slowdown that a recession occurs, which is usually 2 negative quarters of GDP growth. So GDP going negative 2 quarters in a row. We did have one last year. They said it wasn't a recession, but anyway, feels recessionary, right? There is not a lot of real growth around in the world economy right now, and rates are way too high, so they're going to come down. So everyone is scared, recession, recession, recession. Let's look at what happens usually though after the first rate cut. So this, I think, is from Goldman Sachs here. So we have plus 1 month. It's not going to move a lot. If you look at plus 6 and plus 12 months, look, most of the time it's fairly positive after. So there's not really much data to look at here. Months to recession after the first cut. Sometimes it's like 4 or 5 years. Sometimes we're already in a recession. Sometimes it's 20 months, 35 months. It's hard to really see this data as anything other than very, very noisy. Most of the time, it seems to be fairly positive for risk assets. I think there's a different reason for this, which I'll talk about in a second. Median path of S&P. So you can take that as maybe Bitcoin, NASDAQ, S&P, how it goes. As we can see here, no recession within 12 months. Stock market does very well. If there is a recession, stock market doesn't do as well. Again, very, very difficult to really figure out what is going to happen because the data is just, so unpredictable. Most of the time, things are positive after 12 months. There's really no other data that anyone can show you that may predict what's going to happen. I don't think recessions are allowed anymore to any great extent. You can see the fiscal stimulus, government stimulus, and the central bank stimulus comes in. And so that's why I'm in BTC. I think that comes a lot quicker than it has in a lot of previous cycles back into the 80s. Very different market right now, very different economy right now. I often say that Bitcoin is the antidote to stimulus, but what does that actually mean? What is stimulus? Well, it's the government creating credit and so spending more than they take in tax. So they're creating credit, they're pushing money into the economy, stimulating demand and GDP and employment. And then sporadically, the central bank, if necessary, will print money, simply print money to buy that debt as well and force money into the economy. I think without those two things, GDP doesn't grow anywhere near the rate that we think, which is they want it around 2%. I think GDP goes negative in that respect. And if GDP goes negative, that means the price level goes negative, and that means all debt becomes unserviceable. If the price level starts to decline, that means all debt that is taken out on those prices becomes ever more expensive, and the whole entire system collapses. The economy and the financial markets are completely separate. Financial markets are built on leverage. The economy wants to disinflate prices as wealth is created. So in that comes government stimulus to keep prices high. And if that doesn't work, over the short term, the central bank can print money. And you can see it happen in the last 4 or 5 years. So GDP, they just want to go higher because it must go higher, because prices must be higher, because leverage is placed on those assets. You can see here that GDP starts to go negative here during the pandemic and the resulting stimulus from the central bank. When GDP starts to go negative, there will be a reaction. If we get a recession, there will be a reaction. They print money to keep GDP going higher, but that also creates huge asset price rises because the assets cannot be printed as fast as that money. And so they must price in the extra currency units that are now circulating. You can see since the crash here, what happens? GDP starts to go negative, they print money, and they print, and GDP goes higher, but so do assets. And they print money here, and GDP goes higher, but so do assets. And so you just cannot be in the currency, because that is the thing that is going to get debased to make sure that GDP goes higher, because there's so much leverage in the system that it must go higher. Otherwise, the whole thing collapses like it did here. And I don't think they want that. They don't want that. We don't want that. It's much better to lose 10% of your purchasing power each year than it is to wake up one day and 80% is gone and you can't do anything. So that's why they print. I don't think it's nefarious. I just think it's the only option. There's too much leverage and it can't unwind. And the only way you unwind it is by printing money slowly and debasing the currency. Because you don't want an actual unwind, which is all the assets that we own, including Bitcoin, going down to like zero, right? You don't want your house price going down. You don't want that to happen. And so it's just 10% a year currency debasement. That's easier and it gives us an opportunity to get out, right? So this is the issue, is that net worth of people that own assets is going much higher and the net worth of people that mostly don't isn't. You can't be in the currency, you have to be in an asset. If you live in a country where the housing market is decent, that's great. If you can get the S&P and the NASDAQ, that's great. But I think Bitcoin is the best option here for many reasons, which of course you guys know about. But they always print money. The leveraged system has to have GDP going higher. And when we get a recession, I'm not worried because I know what's coming. They must stimulate eventually. I'm happy to see volatility in my assets. I'm happy to get a drawdown from an all-time high of 80%. I don't care. So I think the stimulus is coming. And when it does, asset prices do price it in. You can see the amount of money that is being printed is insane right now. And so assets will keep going higher. If you want proof of this as well, go to Venezuela and look at the Venezuelan stock market. As money is printed, the stock market goes up 10, 50x. It's not real wealth creation. It's just pricing in the currency debasement of the currency. It's happening with the dollar at a faster and faster rate as well, the world's reserve currency. So that's the big one. And Bitcoin, I think, is the best way to protect against this. If we get recessionary headlines in the mainstream media, maybe unemployment starting to tick higher, and that data starts to feed out in the mainstream, people start to panic, sell their assets. Very good news. Buy that weakness, right? And make sure that you can hold for a period of time. Make sure that you and your lifestyle is taken care of and you have the cash to meet your needs, but then invest in assets during panic. This is Bitcoin versus the other assets that people may want to buy. So we've got the NASDAQ here, S&P, gold, VNQ, which is a real estate index, US oil, just oil, and then DBC, which is a commodity index. Bitcoin is money. You earn it, you save it, and then you spend it on the things that you want later on. Food, energy, healthcare, housing, right? Entertainment. They're the things that you want to buy later on. Bitcoin is buying more of those over time. To say that we're in a bad spot at 55K, we were at 70, all-time highest price it ever traded at, and now we're down from that. We're way up on the year. This is great news. We are outperforming everything else that we would want to buy. This is why we're in Bitcoin. It's done that for 15 years. We are in a great spot, and if people panic, we'll buy that because we can wait for the stimulus, and we're going to outperform all the stuff we want to buy. It's literally as simple as that. If you do trade, check out the Bybit deposit bonus down in the description below. You can get set up there and ready for the trade if it occurs, if the panic occurs. I'm James, this is Money G. Cheers for watching, and I'll see you in the next one.